Hey, John Stevenson here, the Guaranteed Retirement Guy, and I wanted to talk to you a little bit about stocks versus annuities. So, believe it or not, I do get this question. Which is better? Should I have my money in stocks or should I have my money in annuities? And my personal opinion is I like both. There's nothing wrong with either of them. I mean, stocks are great. Stocks are fun. You get to own businesses and you get to take part in growth. And, if it's either global or if it's US, it doesn't matter. I mean, if you're looking for growth, stocks can do very, very well. Of course, if the market drops and, we have a 40% drop, of course, usually the value of your stock will go down with it. And so sometimes that's not fun, but sometimes people don't care if they're 30. They don't mind. They'll just buy more stock. And that's fun. I mean, I like that. I like growth and risk isn't too big of a deal with me personally because I'm younger and I don't mind taking some risk. But at the same time, I also like as part of my portfolio to be annuities because I also like guarantees. I love guarantees, and along with a healthy stock portfolio, maybe you're into mutual funds, maybe you're into real estate, any type of risk. If you're into that, there's nothing wrong with that. But if you want annuities to be part of your portfolio and you want guarantees to be part of your portfolio, then maybe you should be looking at those as well. So a lot of people reach out to me and they're thinking they like maybe a little bit more balanced portfolio because they've had all their money in stocks or ETFs or whatever, and they like it, but they also want to make sure that their income's covered. They want to make sure if they're married that their spouse is taken care of. I meet with people who day trade and their spouse doesn't day trade. They don't know how to do it. And so they meet with me because they want to make sure that an annuity is part of their portfolio so that they can have guaranteed income and they can have guaranteed income for their spouse. Babe Ruth did that for his wife. He wanted to make sure that she was taken care of as well. And so, she didn't play baseball and he wanted to make sure that her income needs were covered. So when you think about guarantees and you think about risk, there's a place for both. There's nothing wrong with risk and there's nothing wrong with guarantees. It usually makes sense to have a healthy combination of both. And so when people reach out to me and they want to have an annuity as part of their portfolio, they're usually looking for some risk reduction or maybe complete elimination of risk. Maybe they don't want to be in the market at all. Maybe they're 65. A lot of my clients are 65 and older, and they don't want any type of market risk whatsoever. And so they'll move all of their money out of the market and they'll move a large portion into annuities because they want guaranteed income. And typically, if that's the reason why you were building up your retirement portfolio in the first place was for income in retirement, then usually have an annuity as part of your portfolio or even several annuities as part of your portfolio can be a good thing. And a lot of times people will have 50%, 50% or even 70% of their portfolio annuities. Now, typically when I look at your situation, I will try to use the least amount of your assets for an annuity, just enough to give you the guarantees that you need. But, everyone's different. You might be wanting a lot more income. Maybe you want income for long-term care. Maybe you just want more income in retirement. Then usually more annuities will take care of that for you. And so maybe one annuity is not enough. Maybe 3 or 4 is better. It just depends on what you're looking for. Maybe you're looking for an annuity that will give you some growth when the market's good and some protection when the market's bad, but also be able to give a much higher death benefit. Maybe you want an annuity that will pay you out 3 times the amount of your account value if you were to pass away. There are annuities that do that. So there's a lot of cool things you can do with annuities that you can't do with stocks. They're both used differently. It really just depends on what you're looking for. If you're looking for a preferred stock that maybe pays a dividend, there's nothing wrong with that either. Obviously, there is risk in owning preferred stock that you don't have with annuities, and that income, that dividend is not guaranteed. And so there's nothing wrong with that. It's nice to have that as part of your portfolio. But if you want some absolutes, some guarantees, then an annuity might be just the thing for you. So it might be a fixed annuity, it might be a fixed index annuity with an income rider attached. There's so many variables, and we can look at that. So if you want to book a call, you'll notice that there is a link below this video. And I love talking about guarantees. I love to talk about those with you. If you'd like to book a call and you'd like to kind of see what that would look like for you, maybe you have certain income needs and you need to make sure that they are met, and you need to make sure that they're met for your spouse, and you want to make sure that no matter how long you live or how long your spouse lives, that income continues to come in, no matter what your stock portfolio does, then it might make sense to book a call with me, because I look at all the carriers, I look at all the companies, and I hold nothing back, because I'd rather you be able to see the possibilities of what you can get with your money as far as an annuity is concerned. So if that makes sense to you, go ahead and book a call and we'll chat and kind of get to know you and see exactly what you're looking for and answer your questions. And then we'll go from there. So again, thanks for watching my video. Look forward to seeing you in the next one.